We have the Taiwanese index, which is sitting with cuts of 1.7%.
This attack crossed every red line, and Israel reserves the legal right to retaliate.
So on the way down, supports come in at 22,200.
Closing basis, I would like to see it close closer to this level. And the Nifty banks 300 points away from the 20-day MA. Normally, you see a bit of a bounce when the key indices hit the 20-day MA. So that's the index that I'm looking at.
LTIMindtree has announced the exit of 2 senior sales executives.
You got the start, which is at about 22,120 on the Nifty.
The cash balance for the company is around $20 million. They will not be looking at raising equity at this point in time.
During La Nina years, most parts of the country get a good rainfall.
You'll find lots of those IT and bank representatives dragging the index down.
Our health insurance business is one of the fastest growing standalone health insurance players in the industry.
The government support behind Vodafone Idea's upcoming FPO of around 80,000 crores.
It's been a very, very volatile trading session, especially the volatility has kicked in the last hour or so.
Okay, well, markets are down but not out. Broader markets are still in the green, advances outnumbering declines. That's the state of play right now, this afternoon. You're with us here in Closing Bell. We're coming to you from the CNBC-TV18 News studios. I'm Prashant Budbi, my colleagues Rima and Nigel. Kaisa, good afternoon.
Hi, good afternoon.
Good afternoon.
Entering into a holiday tomorrow. But, our picture is not as bad as what we've seen with the rest of the Asian markets.
Yeah, absolutely. And, the broader market is what is giving us a little bit of hope and solace that all is not lost. I mean, all is not lost even on the index, because if you take a look at it from the highs recently, the market's corrected a few percentage points. That's about it. But given as things are, just a few points before we go any further. So where is the Nifty now? After the correction, it basically has retraced down to the 61.8% retracement of the up move. What is the up move? The low was 21,710 and the high was 22,775. It was a 1,000-point up move that the Nifty saw, and we are now trading almost exactly at the 61.8% retracement. The number is 22,117. We are at 22,133. That's the Nifty. The Nifty Bank also corrected, although it has picked up from the day's lowest point. But at the day's low, it managed to defend the 40-day exponential moving average, which is at 47,300. The day's low was 47,316, 317 or so for the Nifty Bank. Broader markets are doing well. 2:1 advances to declines, actually maybe even a little better. And for the first time, we're perhaps starting to wonder whether the US market perhaps is going into a bit of a correction as well. We've been highlighting this over the last couple of days. With yesterday's price correction, the S&P broke below, the futures broke below the 55-day moving average, which for that index has proved pivotal in the past. The weekly close below that level will be what I think markets will watch out for. And of course, I mean, geopolitics, we don't know what will happen, but markets are awaiting what Israel will do, because it said that it has no option but to retaliate with regards to the attacks from Iran over the weekend. Rima.
So geopolitics and earnings take center stage. But on Thursday, it's an important day. We've got Infosys and Bajaj Auto reporting numbers. And there is some nervousness going into Infosys on Thursday. The stock is down close to about 3.5%. It's moved to the day's low. But even the rest of the IT pack. So LTIMindtree, here there are senior level exits which have also hurt the sentiment. But you've got cuts in HCL Tech. Even TCS is down close to about 1.7%. Bajaj Auto ahead of its numbers too on Thursday is down 1.5%. Hero MotoCorp is giving it company, but on the way up you've got Eicher Motors, and there is buying seen in the the traditional FMCG names, the defensive. So HUL, Titan, and HDFC Bank is also batting for the bills.
Well, I think we have 60 minutes to go, but I'm expecting some fireworks in the final 60 minutes or so, because we have 2 weekly expiries that will play out. There's the Nifty Financial Services Index as well as the Nifty Bank. Now, both the pillars of the market, that's the banks and the IT index, they are at a very, very crucial juncture. And I say that because it's very close to 2 very important technical levels. Let's pull up the Nifty Bank first. On an intraday basis, it went ahead and broke the 20-day MA. But it's now at the 20-day MA as we speak. So if we just pull up a chart, you'll see that the Nifty Bank is very, very close to the 20-day MA mark. It's mildly above that. So that's point number 1. So that's one pillar of the market and the larger one. The other one is the IT index. Now, as Rima said, it's under some pressure. Infosys is nervous getting into its numbers. And if you pull up the IT index, which should come up for you on the screen, the 200 DMA is very, very close to it. So that's the one that we're talking about. That's the 20 and the 50 DMA. You pull up the 200 DMA, that'll give you a better picture. It's at around this 33,650 odd mark. The simple daily moving average, that's around 200 points away from here. So that's the crucial mark. The yellow line is up for you in this screen. So just want to highlight this. On both the pillars of the market, they're at very, very crucial junctures. Nifty Bank on an intraday basis and the Nifty IT index for the next couple of sessions, given that we have large names that will be reporting their numbers. So those are the two technical levels I wanted to point out. Well, let's find out how do you trade this final hour. Tomorrow you got a holiday, but for the final 60 minutes, what do you do? Mitesh is back with us. Hi, Mitesh. Good afternoon. Well, you were mentioning earlier today that you're not very, very confident about this sort of a bounce. Now, today, at least the lower levels got defended, though we're unable to hold higher levels. What would you do on any kind of bounce? Would you continue to short, or do you think the markets are trying to find some kind of a base at lower levels?
Good afternoon, Nigel. I still don't believe that, we have found a bottom or we found a base. The idea is that the structure remains weak, and this time, the worry is that the gap which happened, that happened on a Monday. So we have a weekly gap, and weekly indicators also turning down. So slightly on the negative side, though I think, given the fact that this week itself, the Nifty is down by about nearly 2%, and support levels to kick in around 22,050, 22,100. I think we've seen a mild pullback from there, but to me, the structure remains negative. So one, I'll avoid longs. Two, I'll use rallies to sell into. And that's the strategy which we are advocating. Though on stock specific basis, we have had some long positions. It also works as the counter hedge towards your short positions on the index and other stocks. And, basically the idea is to identify opportunities in both directions. But the more bias or the more, preferred trade today is on the short side. Right now, I would recommend a buy on HDFC AMC with a stop below 3,700. And here, look for targets of around 3820. And LTTS is a sell with a stop at 5420 for targets of 5200.
Okay, thank you very much for that. Exide is a stock on our radar. Nomura has raised the target price on the stock, and the stock has been quite the outperformer. Sudarshan joins in with details of this Nomura note. Sudarshan.
So remember last week on April 8, Exide announced an agreement with Hyundai and Kia to supply battery cells. And since then, stock has been up 40%. And after that, many of the brokerages have written on the company and have raised target price. Now today, Nomura maintains buy rating and target is raised to 485 from rupees 233 per share. It says EV sales get validation from Hyundai and Kia agreement, and alliance with global companies, government support and EV traction might be key for the success, and it is now more optimistic of companies' ability to win new orders from other global companies. And considering all this, it has raised multiple to 3x book value, which will now be in line with global peers. Just last week, JP Morgan had also raised target price to rupees 480 from rupees 330 per share, and had increased valuation for EV battery business from rupees 25 per share to rupees 173 per share.
Thank you very much for that. The other big mover on the back of a brokerage upgrade or a note is Bharti Hexacom. Jefferies has initiated coverage with a buy, target price 1,080, and the stock is now surged to more than 900 rupees. Remember, the issue price just recently was at 570. Jefferies says this is the best play on the Indian telecom story. Now, what's the Indian telecom story? That one, there is a lot of growth, there is penetration, subscriber numbers are increasing, and the ARPUs are the lowest in the world, and therefore there is scope to increase ARPUs. Now, Jefferies believes that compared to the rest of the peers, now Bharti Airtel is a sum of parts. You have Africa, you have the enterprise business, you have D2H. So if you want a pure play, while a structural story, on the India's mobile business and its growth prospect, then Bharti Hexacom is, the stock for you, because they operate in two markets, Rajasthan and Northeast, which have lower tele-density, which means a higher propensity to get more subscribers in. Also, the subscribers that in these two circles have a greater proportion of 2G. So therefore, there is a higher chance of upgrading these 2G subscribers to 4G. So Jefferies believes there is a 16% revenue growth potential year after year, which is driven by a 12% ARPU increase, and the balance is a subscriber growth. This revenue growth, strong revenue growth of 16% over 4 years, will drive a margin expansion. So margins will go up 600 basis points. Cash flows for the company are also better than peers. For instance, a Bharti Airtel, because the spectrum that they've acquired doesn't cost as much because of the circles they're present in, northeastern Rajasthan. The pure price, the base price of the spectrum is not very expensive. So the amount that they owe to the government is also less. So the cash flow position is superior, and therefore the company has scope to start paying dividends too. So therefore, according to Jefferies, Bharti Hexacom offers a great way to invest in those parts of Bharti Airtel's businesses that are growing faster, have a higher ROCE and better free cash flow conversion.
All right, Rima, thanks very much for that. That's a big move. I mean, from the issue price, of course, is done phenomenally well. Deepak Shenoy is with us, founder at Capital Mind. He's needs no introduction, really. Deepak, great to have you with us here. Thank you very much for your time. Markets are doing what they are, but there is enough, what should I say, mirch masala down the ladder. If you look at broader markets, right? A lot of activity and really a very vibrant screen. And some of these newer businesses which are making it to the market, like what Rima told us, Bharti Hexacom, doing very, very well. What's caught your eye in terms of individual names, Deepak?
Thanks, Prasad. I think, the market's been, unkind to banks and financials. I think that's why the Nifty is a little, been not as moved, has not moved quite as much as some of the small and mid caps in slightly different sectors, some of the larger caps also. Now, one of the things that we're looking at carefully is tourism and hospitality. Hotels, for one, we've recently added a little bit of Oberoi hotels about a month and a half back. But the idea here was their expansion plans beyond where they are right now. They don't have a property in Goa. They will now have two in a few years. They've got their own greenfield project and they're taking over another property. There are three more in alliance with the Reliance Group in Bombay and in Gujarat and in Dubai, in the UK. So there is some growth, and there are only 33 hotels, so adding 5 more itself adds some heft to the portfolio. But the other big thing is that, travel seems to be doing very well, hospitality as well. So you can't get rooms and you're willing to pay higher, even if you're willing to pay higher prices. Oberoi is among the most expensive properties. Trident is also relatively, it's smaller, lower cost than the Oberoi hotels, but it's the same group. But so therefore, even then, the absolute numbers are much higher than they used to be earlier. So I think here is where you get, I think there is a significant growth path ahead. So I'm looking at this as a 5-year view. Overall, some of the manufacturing, companies in, say, the electricity distribution space, transformer space, they have been catching our eye recently. We haven't done, a major investment yet, but we're doing piecemeal picks of a few companies. We'll wait for results now. The March quarter is usually very important, so we'll see commentary from there and take it forward. I haven't, from Bharti Hexacom also, I will wait till they actually have their first announcement of results before we conclude whether it's a good investment or not.
You were talking about, you said you picked up some in the transformer space, transformers and rectifiers, Deepak?
No, it's one of the other companies. I'll talk about it once we finish buying. It's relatively smaller in this case.
Got it. Fair enough.
All right, and Deepak, since you spoke about hotels and tourism, any view on Thomas Cook? That one actually, the street had got excited about it. Then the stock saw a big correction. I had interviewed the management, Mr. Menon, and he said that he expects things to look up. They're focusing on return ratios, on growth, expecting margins to hold steady. For the time being, the stock is up 10%. Any view on that name?
Yeah, there was. I'm sorry, I forgot. We had done some work on this a while back, and there was something about it that didn't excite us at the time. Don't exactly recall what, but in general, I would imagine they would do well because the tide is up, so everybody in the sector should. But there was something external to it. I'm sorry, I don't remember exactly what it was that we thought that we'll participate through other mechanisms. Directly through through entities rather than through the agents. So we would either buy an airlines or a hotel or a hospitality property directly rather than participate through agents. But I haven't seen their numbers recently, so I don't have much of an idea. So unfortunately,
anything to do with the promoter entity Fairfax that you all didn't get in?
Yeah, there was some confusion there also about what they were going to do with it, but that was more than a year ago.
Okay.
I think now they're more clear, but I forget. I'm sorry. I shouldn't say anything without having a clear comment.
All
on
right.
it.
All right, we let it pass. Then for the time being, though, the stock, midway through the trading session has got locked in upper circuit, and there are pending buy orders out there as well. Just to tell our viewers, the management had guided for double-digit growth, margins holding steady, and they said that their return ratios will improve from here on as well. But let's get in Nimesh now. He's standing by. He had told us earlier today about the standout brokerage report, and he's back to help us revise that note. Nimesh.
Hi, Nigel, sir. Today's standard wasn't actually HDFC AMC. That stock is buzzing in trade up 3% and on good volumes as well. Essentially, JP Morgan has today upgraded the stock to a buy from neutral. They've sharply raised the target price down to 44.50 versus the earlier target price of 3,500. Now, the upgrade is essentially because HDFC AMC has got market share gains largely on the back of good performance in the funds, and that actually has been the key reason for the big upgrade there. They believe that even the benefit of merger is still yet to flow through for HDFC AMC. Also, the core EBIT margins are going to be steady despite the change of mix. And on back of all this, JP Morgan has actually upgraded the 25 and 26 estimated EPS by 11%. So, strong earnings ahead, market share leader, and that's the key reason why JP Morgan should upgrade the stock to an overweight now, and they've raised the target price to 44.50.
Deepak, your view on AMCs, in particular HDFC AMC?
This is, we're in the same business, so we obviously should like them. But one of the things that with AMCs, specifically with companies that are only AMCs, is you can't do anything else. So the cash flow is good, but you can't use the cash flow to grow into any other related business outside of just the AMC field itself. Which is good. So this quarter, I expect some. So what happened in the December quarter and earlier was there was a big chunk of their own money invested in their own funds, which added a significant amount of the bottom line as well. I don't think in the March quarter it will be that good. It will be okay. But I think overall this whole financial year they will make a lot more money from the investments that they've made in their own funds, and they have 75% operating margins, largely because of SEBI rules, which migrate almost all the costs down to the underlying schemes. The AMC itself just takes only the management fees, and for them the costs are relatively well established. Here I feel they have been eclipsed by SBI and ICICI already. So a little bit of loss of growth is there, but overall it's a solid company that generates cash flow. So I would look at it more as a cash flow generating play than a growth play per se. They should grow at 15 to 20% per year, but they're valued at a little more than that. So your only worry would be the valuation and not the business itself. The business is solid.
Okay, all right. Deepak, what about HUL? That's been one of the rank underperformers last 12 months, last 18 months or so. But we have seen this in the past, right? The stock goes through phases, a few years of consolidation, doing absolutely nothing, underperforming the market. And suddenly it gets to that phase when suddenly the stock doubles or sometimes even triples. What's your view on the stock? Last 1 year, it's down close to around 12%, 12.5% in a market that's been booming. But today it's up close to 100%, while the market is a little under pressure. Your view on it at around 2,200?
I've used to own HUL, and honestly, probably 2 decades or 3 decades of owning it. And earlier in the 90s, it used to be like the favorite stock of the market. It was growing fast. Over the next few years, over the last few years, it's actually grown very little. Most of this growth in stock price has come in a short period of time, mostly from PE expansion. So it went from a PE of 30s to 40 to all the way to 80, 100. And now I think the market's starting to realize that, listen, we don't have serious growth here. The results will also be compromised by the Unilever decision to increase royalty. So that will crimp the margins a little bit. Therefore, it doesn't make sense to pay a very large price to earnings multiple for such a firm. It would make sense for it. I think there will be a time correction here more than a price correction of meaningful form. So you might not find it the best way to play the India story for the next few years. You might want a stronger growth story in your portfolio. However, I think it will be stable. It won't necessarily give you that 30% crash as well. So more a defensive than anything else.
Deepak, what about Vodafone Idea? Retail shareholders have an option to buy it at between 10 and 11 rupees. The stock has not done anything for a very long time. But do you think the tide is turning in favor of Vodafone Idea?
No, we were having this discussion here, Rima. In fact, the problem with Vodafone Idea here is it has a negative 1,60,000 crore balance sheet. Raising 20,000 crores is not going to change that balance sheet meaningfully. There is still a fairly large amount of money that needs to be paid, and money that accrues interest on a monthly basis going forward, though they don't have to pay it. While their cash flows seem to be okay right now, the problem is the upcoming payments to the government, which will stress them at some level. I believe at some point they've had a government intervention in terms of saying, we won't take the money in rupees, we'll take it in shares. So the government owns 33% of the company. Today they're doing an FPO. I don't know how successful that's going to be, but Vodafone will play no part in it. Perhaps some of the promoter entities will. Perhaps some funds and all may participate. But I feel here you're facing multiple challenges. There will be a big payment coming out of the government at some point. At that time, there will be cash flow stress. Banks will not be able to lend meaningfully to this company. When you have a negative balance sheet of, negative shareholder equity of 1,50,000 plus crores, how do you lend to it? You can't justify that lending in any meaningful format. The government is unlikely to take more shares because it's already 33%. If it crosses 50%, Vodafone Idea becomes a PSU. And I don't think that is acceptable as a conclusion. So I think overall, tough. If you want to play the telecom game, there's always Bharti and Reliance. I'm biased here because we own Bharti and Reliance. But I don't think Vodafone is, it's on what they might call a sticky wicket right now. So not in favor.
So you're not in favor of Vodafone Idea, you rather stick to the two other larger players in the telecom space. Deepak, what about Z? That's been an underperformer, but it's showing signs that at 140 or there are buyers that are coming in there. Even in today's session, the market's virtually at the low point of the day, but Z's moved to the day's high. There are some positive sound bites coming that there is focus on, if business is not picking up, then the focus is on cutting down on cost. And they're saying that margins will be achieved. Will you buy that argument?
Well, I think Z's problem is now beyond the margins and they might go back. They've been one of the few profitable players in this space. They have also kind of been one of the largest players in the space, listed entities as well. They used to be a part of the Nifty as well. But over the last few years, the situation that's happened at Subhash Chandra's promoter companies has in fact resulted in the reduction of their stake to just 4%. Whereas now a lot of the stake is held by a bunch of other players. The idea effectively is who's eventually going to control the company. That specter still it's not resolved as an issue completely. It is, I think, something that we will want to wait to see how that evolves. Even though there may be intermediate statements on reducing costs and so on, the larger question is who's going to own this company, who's going to run it, because at a 4% shareholding, the Chandras are unlikely to be, the Subhash Chandra's family is unlikely to be, able to control or retain stake meaningfully in the company. I don't know the status of the merger right now. And there's been a lot of other talk as well about how this moves from a legal perspective. I would say at this point, unless there's more clarity on it, I don't think it's worth it, though it might still be profitable at some point.
That SEBI order, by the way, is still awaited on Z. That final order is still awaited. So I think that's going to be, at least in the near future, something to watch out for. Just a word on Aditya Birla Capital, Deepak, if you've looked at it, there was a Macquarie note recently on it, kind of saying that it's a well-diversified lender now across the board. There was a press conference today. The CEO and, of course, the promoter, Mr. Birla, were also there. I don't think the street's too excited about what was announced there, but would you read this as the Mr. Birla there kind of talking about the business, etc., as sign that they are thinking about how to generate shareholder value? I mean, is that the signal to take away?
I hope so. I mean, to be fair, they talked about a lot of things. They've now moved into paints, they've moved into today gold, I think, or jewelry, and a few other spaces, except maybe meaningfully into a Vodafone Idea, which is also a sign in a different way. But the idea in Aditya Birla Capital was owns the insurance business, owns the lending business, and also owns the promoter stake in the sponsor stake in the AMC, which is, I think, separately listed. So the insurance business is doing okay, reasonably well compared to what it used to in the past. It's slowly grown up. The lending entity has been showing decent growth, decent. I mean, I think it's reasonably capitalized as well. So that may be a game changer going forward. I don't know. I haven't seen the numbers recently, but it has been coming up on our radar recently. We have just avoided NBFCs totally. We don't believe that this is a great time. Next few months is going to be a great time for both, for most banks and financials. We've cut down our financial exposure overall, largely because of the RBI focus on reduction of credit to unsecured loans, which has been the fastest growing sector. So I don't know how deep AB Capital is in that. But I would say that would be the only risk factor. I haven't seen it recently, maybe not in the last month or so. But I guess once results come, we'll analyze this company as well along with the rest and see if this is a worthwhile NBFC thing.
All right, Deepak, thanks a lot for that. Wishing you a good afternoon and good evening ahead as well. By the way, before we slip into that mandatory break, just pull up Patanjali Foods. GQG, their stake has gone up substantially. I was looking at the December filing. The stake is close to around 3%. And as of the March filing, it's moved up considerably. It's at around 11%. So explains why the stock has moved up. The disclosure just hit the exchanges a few minutes ago. And that's the reason why the stock has spiked up in the last few minutes.
Okay, we'll get into a break on that note. As we do that, here is a quick programming note. Join us live for CNBC-TV18's Future Female Forward, the Leadership Circle, a transformative platform where women leaders come together to connect, express and evolve on the 18th of April starting 5:30 p.m. onwards. The circle of trailblazing women leaders from diverse fields will venture beyond the traditional discourse. This leadership circle is not just about business strategies and professional accolades. It's about delving into the depths of the personal journeys these women have taken. Hear their stories of resilience, courage and triumph. Discover how they navigated challenges and found their success in their field. You won't want to miss this opportunity to gain insights and be a part of a powerful community of women leaders. That's CNBC-TV18's Future Female Forward, the Leadership Circle on 18th of April, 5:30 p.m.
Welcome back. You've got the market, which is, the Nifty at least is down, but the broader market is doing just fine, absolutely fine. Although their market breadth has moved, sort of closed, right? 1,500 stocks are higher and about 1,000 stocks are lower. But the list of volume-led advances is still very, very strong as compared to what is down on volumes. And I think that is an important metric here. Trideep Bhattacharya is with us, Chief Investment Officer, Equities at Edelweiss Asset Management Company. Trideep, good to have you with us here. Thank you very much for your time. First, since our last chat, Trideep, if you can update us, what have you been doing in the fund? What have you added? Where have you trimmed positions, if any, and the actions you've taken?
Yeah, I think, first of all, thanks for having me on your show. I think overall, what we are focused on right now, particularly as we head towards the next result season, is to identify those areas where we think earnings are likely to be relatively or in absolute terms resilient versus others over the next year or so. And I think one of the areas that we have added in the weakness that we have seen to a certain extent in the correction last month has been in the power side of things, where while a couple of weak data points kind of led to some correction in power related stocks, we've sort of added to our exposure there overall. Because I think overall structurally over the next 2 to 3 years, we think that the supply is growing far slower than what the demand is. And given that we are moving towards industrial sort of a recovery, we think that that's one area where companies exposed to the power supply chain could add, could see some robust earnings and whatnot. Apart from that, couple of stock-specific weakness is what we capitalized on. So net to summarize, we've been sort of, with a bit of a firepower, we've been waiting for the correction that we have seen so far and added to areas like power, some selective elements of tech, and I would say that in capital goods, where we saw some correction come through, we've added to them.
Okay. What else are you scouting for? You said you still have a war chest with you or some firepower. Are there any other spaces that you're analyzing?
So I think overall we are interestingly looking at IT as a pack. We don't expect anything great shakes coming out of the result season. But I think if you look at the commentary made by the industry leader which reported recently, he said FY25 to be better than FY24 and the deal wins are improving. Again, towards the back half of next fiscal year, we think there's a reasonable chance that we see some sort of recovery come through. And that's something that we are keeping certainly on our radar screen. Any weakness that we see on that, we sort of add on to it. We moved from underweight to neutral about a quarter back, and hence, directionally speaking, we are looking at it, looking at the sector a little more constructively, not in a hurry, but maybe over the next couple of quarters. That's one that we are thinking positively. Second, overall, I think we are a little more selective within banks and financials, particularly within NBFCs. Some of the stocks have seen meaningful correction on the back of RBI focus on funding, liquidity, and growth. And as the weakness comes through, we are capitalizing on them to sort of, particularly towards the AAA rated NBFCs, any opportunities, we are sort of sizing them up in our portfolios where we might have missed earlier. So it's mostly kind of trying to cover up for in any area that we have left rather than any really fresh purchases that we have done over the last month or so.
Okay, all right. Hi, Trideep. Good afternoon. Good to see you in. So a little bit, turning a little bit constructive on parts of IT and on banks and financials. You're looking at some of those better rated NBFCs. Some of those NBFCs have gold exposure. Since gold is moving up, I just thought, we'll try to zero that down.
Well, can't get more specific than that. You very well know the stocks that they are. But I think the framework that I use in here is as funding gets tough, as the regulator gets tough on the quality of growth, the companies, the NBFCs which have better funding exposure and which are better rated will have better source of or access to capital. And that will drive the alpha, in my opinion, over the next 12 months as quality of growth becomes important assessment, going forward.
Okay, all right. What about, since we're talking about banks and financials, you give us your view on NBFCs. What about between private and public sector banks? Public sector banks obviously did very, very well. Now there are signs, HDFC Bank's quarterly update was quite good. Some on the street believe that maybe the worst is in the price for that bank. What is the preference between the two?
Yeah, so I think overall we have been overweight public sector banks for the last year or so. And we have sort of reaped some of the benefits overall. So we have, in pockets, actually taken some money away from public sector banks. We might be a little ahead of the curve over there. And we are putting in those banks where we think, particularly some of the sector leaders, where we think that it has kind of seen meaningful amount of correction and weakness, fundamentally speaking, over the last couple of years, driven by management transition. And maybe over the next 2 or 3 quarters, things may actually turn around. We are not in a hurry again. I don't think the needle is moving in the next quarter or two, but I think when it moves, it will move quite quickly because the market positioning is quite adverse or on the short side. So a little bit of improvement could create a meaningful amount of movement there. So we are mindful of that and hence gradually shifting capital into those areas which have underperformed over the last couple of years.
Are you looking at metals constructively?
Yeah, so metals is another area I probably forgot to mention that we have added tactically, not structurally, over the last month or so, particularly as a subset of the power theme where we think, overall meaningful amount of mines, etc., come online. And some of the stocks had their QIBs overall as well. So metals is something that we've increased our exposure to, but we haven't gone overweight. At best, we've covered our underweight. We are mostly neutral. We think the recent buoyancy that we are seeing in China is more transient rather than kind of structural. But we have covered our underweight and we are kind of well positioned with regards to any near-term rally that we might see or what we have seen, even though we don't remain, we are not fully convinced of the medium-term outlook about the metal sector.
Pull up Viatech Vabag. That one is up 16%. That's a market leader in desalination plants in India. And we had the management with us a couple of days back. I mean, this is, I think, towards the end of last week. The company had gotten into a fair bit of trouble about 10 years ago, 8 to 10 years back, with regards to receivables, etc., from local municipalities they were working with, state governments and such. But they've come back in a strong way. The company told us they've got about 12,000 crores in orders. Pipeline is strong. I mean, the technology they're betting on is doing very well for treatment of water. And of course, I mean, with manufacturing sort of picking up in a big way, these plants are required across the country. So they're working with many large industrial groups, etc. as well. So that is Viatech Vabag. Any thoughts? I know, Trideep, you can't talk about specific names, but water and reusing water, I mean, all these things are going to be increasingly important. I mean, the direction is clear, and there are a few companies who do this. Just your thoughts, Trideep, on the theme.
So basically, overall in the industrial space, while, I mean, last 2 years we saw the short cycle exposed companies do quite well. And some of them have run up quite nicely. They probably have more to go. But I think we are focusing our attention to those companies which provide nuts and bolts or some specific areas like the ones that you mentioned onto something big. For instance, desalination, or for that matter, companies that provide maybe turbines or stuff like that. Those are the types of companies which are in the niches, operate and help the manufacturing uptick that we are likely to see over the medium term, and that's where the next round of alpha is likely to come through. And finally, I would mention in capital markets, I think increasingly there are a couple of players where turnaround stories where some of the historical offerings have expanded meaningfully, and I think there could be non-linearity with regards to earnings that have sort of that might play out over the next couple of years. So I think last month or two, we've been focusing on more stock-specific areas where relative earnings turnaround could be meaningfully strong and, added to those names, apart from the nuts and bolts to suppliers to industrials, even transformers, and those are the areas that we are focusing on to add to the next level of growth in our portfolios.
Trideep, we leave the conversation here for now. Thank you very much for joining in. It's time for our segment D Street Chatter. Nimesh is joining in to get us an insight into the dealing room chatter and also about a few stocks that he has picked up. Nimesh, over to you.
Hi, Rima. So another day of markets where it's been at day's low, but today for a change it's backed by FI selling as well. So I understand you probably will see a large FI sell figure in today's market. On top of it, there is a large MOC basket selling as well at leading FI. So maybe the last 30 minutes could be quite volatile on the negative side. That's from a flow perspective. Having said that, the surprise to the market is there are a lot of stocks which are doing actually well as well. A lot of mid-cap stocks have done well today. Prashant pointed out a few names which are buzzing in trade, up 10-15%. So despite weak global cues, despite large sell-off, some pocket which has done well today, which is a bit of a surprise for the market. And remember, it's a truncated week. We are not working tomorrow, so that's something to note of. The sector which is under pressure seems to be the technology name for the second day running. Big selling pressure on those names. So across mid-cap and large-cap IT names, there is selling pressure, and that's showing up in the stocks as well. On the flip side, though, some bit of buying seems to be emerging in select auto names as well as some pharma stocks as well. So that's again well bid from a larger institutional point of view. From a Nifty point of view, I guess 22,175 is a very crucial support on the Nifty. If that gets taken out, you'll see a sharp sell-off. So that has to be taken into account. But clearly, today's market is a bit confusing. Heavy selling from the larger FIs, but still the broader markets, selective broader markets, have actually outperformed.
Indeed, Nimesh, few stocks just spiking up as we speak. You have Exide that's locked in upper circuit in this sort of a market. So individual stocks, what are you picking up?
Well, so the first stock on my list today is Coffee Day Enterprises. After a long time, this has come to my chart and it's big volumes, and the stock is up 9-10% last when I checked. Again, the buzz is that maybe a very large influential HNI investor has bought a large chunk in Coffee Day Enterprises. Also, there is a buzz of a large block deal coming soon in this particular company, so watch out for that as well. The second stock is Crompton Consumers. Well, it's been pretty much flat for the last few quarters, been consolidating a very narrow range of late as well. But off late, I understand a couple of large domestic mutual funds have started accumulating this stock at lower levels. So that's the second name. The third stock is Petronet LNG. Well, the stock is up in trade today, apart from including the entire PSU basket. There is selling pressure in Petronet LNG at this level. So, well, the stock has done well off late. Some bit of selling seems to be emerging. Maybe a bit of profit booking as well in Petronet LNG at this price. And the last name is Samudra Motherson. Again, I spoke about autos doing well today. Some of the auto ancillaries have also been well bid. So there is buy flows in Samudra Motherson as well. Even technically, the stock after a very long time has come out of that range of that last block where Sumitomo sold at 121 odd level. So after that, it's been very long time that price is now crossed. So maybe a bit of technical buying as well in Samudra in today's trade.
All right, Nimesh, interesting list as always. Thanks very much for that. And Samvardhana, Petronet, Crompton, Coffee Day Enterprises are some of the names. Nimesh, you want to come back? You want to add something?
Yeah, Prashant. Okay, I just wanted to add a word on Patanjali. Everybody has flashed that GQG holding has gone up from 3.5% to 11.5%. Technically, it looks little wrong to me. I mean, not that we have reported wrong or other medias have reported wrong. Looks like there is a factual error in that reporting which has come on the exchanges, because I was just looking at the two quarters. The last quarter, the FI holding was 10.5%. That remains constant at 10.5%, little over 10.5%, even in this quarter. So, looks to me, prima facie, it looks to me that there is a bit of a technical reporting error that GQG has increased the stake from 3.5 to 11.5. So we need to just revisit it. I've asked for an official comment from Patanjali as well. But prima facie, Prashant, it looks to me, and the fact that the stock is up 4.5%, just wanted to put on the table that maybe there is a factual reporting in that quarterly filing.
Okay, Nimesh, thanks very much for that. So that is important. I mean, if people have jumped on the stock on the basis of that news report, then Nimesh is telling us that maybe there seems to be a bit of a reporting error, which we will try and clarify with the company. As Nimesh said, he's asked for a comment from the company. So we'll try and have that for you during trading hours. 20 odd minutes to go for close. So that's Patanjali at 14:06. We'll take a break. We are back. We'll tell you what to buy, sell today for a reverse trade. Day after tomorrow. Tomorrow, of course, is a holiday. Stay with us.
Welcome back. Well, there's been a bit of recovery from the low point of the day. As I mentioned earlier, there could be some fun and games. And the stock that we had highlighted earlier today was Reliance Industries. The bulls, when they're in trouble, they'll turn to Reliance Industries. And that's exactly what's happened yet again. That heavyweight has moved to the high point of the day and it's trying to put in a bit of a fight. So we've seen a good recovery from the day's low. Can we get past the 22,200 odd mark? That's going to be crucial. Intraday we did that, but can we drive on the gains from here on? Well, let's get Mitesh back in. Mitesh, you got a couple of picks for us?
Yeah. So I think, emphasis is something, which is looking weak. So I would take a negative trade over there. STBT here with the stop at 2326 for targets of around 2280, 70. That's the range which I'm looking at for tomorrow. And ONGC has come up from the day's high, but BTST can be taken with a stop below 280 for targets of 288.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on Vodafone Idea. Well, they're going to be raising money via the FPO route for its 5G foray. The company has had a bit of a roller coaster ride, especially over the last decade or so. Rima's put all of that together. She's here to fill us in. Well, Rima, the need for the FPO, tell us more about that and the possible road ahead for the company as well. Over to you.
Thanks so much for that. So, the question that we're asking right now is the cycle turning for Vodafone Idea and what can the company do to turn around its fortunes? But before that, a quick check on where the company currently stands. The company has reported losses for every single quarter since its merger, 22 quarters and counting. Its market share has fallen 19% since its merger. It was 35%, the market leader when it merged, and it's now down to 16 to 17%. The debt on the books is in excess of 2 lakh crore rupees, and its ARPU is lower than peers. Now, if it has to script a turnaround, these are three things that the company can do. Number one, arrest its subscriber market share decline. That can happen by increasing its capex. As we said, the company's market share has fallen 19% since the time of the merger. For that, if the company has to arrest its market share decline, it needs to invest in capex. Capex needs capital, and capital was the biggest constraint for the company. With this fundraise of 18,000 crore of an FPO, plus the promoter infusion of 2,075 crore, the company will have an equity capital of about 20,000 crore rupees, which should help the company in closing a bank funding of 25,000 crores very soon. So the company could be left with potential 45,000 crore rupees of capital, and this money will be used for its much needed capex. The company has said that 70% of its FPO proceeds of 18,000 crore will be, for boosting 4G coverage, capacity, and start their 5G rollout. The company plans to start its 5G rollout and cover 40% of its revenue base in the next 24 to 30 months. And with that, the company will hope that its market share losses will at least get arrested. The second thing that the company can do is improve its cash flows by improving its ARPUs. Now, Vodafone Idea's ARPUs are lower than peers. Vodafone Idea is currently at 145 rupees per share. Bharti is in excess of 200 rupees. One of the reasons why Vodafone Idea's ARPUs are lower than its peers, and it stands at 42%, was because the company could not invest in capex. But the hope is that the company converts these 2G subscribers to higher value plans, to 4G plans, and this premiumization can boost the company's ARPUs. Also here, a tariff will help. Tariffs in India are the lowest in the world. It's 1/3 that of China and almost 1/20 that of developed economies. So while the company or none of the telecom companies are committing to when a tariff hike will take place, there is a strong case for one and of a magnitude which is similar to what we've seen in the past, that is a 20% tariff hike. So a tariff hike coupled with upgrading its existing 2G subscriber base to 4G provides the company a clear runway to improve its ARPUs. But the question is, will that be enough for the longer-term survival of the company? And the answer here is probably not. So the number three thing, perhaps, that the company will need is some government support to remain competitive for longer term. Now, as we said, the company owes the government about 2 lakh crore. This includes deferred spectrum liabilities plus their AGR dues. The company has massive repayments, 29,100 crore in H2 of FY26 and 43,000 crore annually over FY27 to FY31 once the 4-year moratorium ends in September of 2025. Now, the Kotak math shows that if Vodafone Idea has to service these government dues post the moratorium, it will require a 134% jump in its ARPU. ARPU needs to hit 340. But tariff hikes of these magnitude don't really look very feasible or real estate. So the street fears that if Vodafone Idea is not able to meet these obligations, then the government will convert its dues, its debt into equity, resulting in a very large dilution. Perhaps 76%. So with that, the government stake can potentially go up to 81% and the promoter stake can fall to 9%. So the best case for long-term survival, perhaps for the company, could be an extension of the moratorium or at least a partial complete relief on the AGR due. For now, the government does seem to be standing firmly behind the struggling telecom operator.
All right, Rima, excellent sort of primer on what needs to go right for Vodafone Idea to survive, of course, but thrive going forward and be a viable third competitor in the real sense of the word. So that's Vodafone Idea for you. The markets come up a little bit. We're at about 22,155, down 100 odd points. We take another quick commercial break here. Jay Bala will join in of Catch the Chaos. Jay's got some views on what's happening in global markets as well, which may have a bearing here in India. So we'll talk about all of that in just a bit.
Welcome back. Well, a few stocks on the broader markets are spiking up as we speak. Kochi Shipyard, pull up the intraday chart out there. Good up move is what you've seen on that name. Genus Par is the other one in there, which has seen a bit of a spike up. And you have Dodla Dairy as well. You know, there was a initiated coverage that came out. Yesterday, the markets were weak. The stock didn't react too much. But in the last few sessions, the stock has moved up. So Dodla Dairy is another one that's moved to the high point of the day. Genus Par as well, from the negative terrain, now moved into the positive terrain. Well, let's get in Jay Bala, who joins us of Catch the Chaos. Hi, Jay. Good afternoon. How are you feeling about the markets? You've been a little bit cautious, I think so. And suddenly we have pulled back close to 500 points on the Nifty itself. Do you think there's further scope for downside on the Nifty?
Hi, Nigel. Good to be here. So yeah, that's what I'm thinking. And the markets were supposed to rally from the low levels that we saw today. The fact that markets broke the intraday morning low has completed a short-term structure. It has a very important bearing for the direction for the next few weeks. I expect the markets to bounce somewhere close to 22,400 to 22,500, and I expect the market to roll over from that point onwards. And we're still above a critical medium-term supports at about 21,710. I expect that to be taken out. Once that's taken out, the markets are likely to slip into a medium-term correction. So while the structure is pointing to a break of 21,710, it's not yet done that, but I'm anticipating that to happen. So watch out for important resistance at about 22,400, 22,500.
So with intermittent bounces or straight, in this current phase only, straight down to 21,700 or so, the low?
Yeah, see, if you look at the markets as it is, it's already giving important clues. For the last three sessions, we've got three gap downs, and only one of the gap downs have got filled, that too very briefly. So, and if you look at the IT sector, that's also, getting hammered now. And I've been slightly negative on it and been warning that the new highs of TCS was a undependent or unreliable move, and that's the reason why we're seeing IT sector below 34,200. I've been saying the IT sector runs a real risk of breaking the 2022 low of 26,100 and change. So, the IT sector is now joining the FMCG, which has been underperforming. So if one more sector joins this market on the lower side, we'll have a medium-term correction and we'll have a much deeper drop to come through.
By the way, on Thursday, we have both Infosys and Bajaj Auto reporting numbers. Infy is the top loser on the benchmark ahead of their numbers. This week, it's seen a correction of close to about 4.5%. The key number to watch, two of them. One is revenue growth in the current quarter, and that's seen declining by 0.5% on a sequential basis, constant currency. And the second one will be their FY25 guidance, and that's broadly seen between 2 to 6%. The company will give a 2 percentage point range, but there are some who believe that it could be 2 to 4%. There are some who believe it could be 3 to 5%, and then there are those who believe the company will guide for 4 to 6%. So anything between 2 to 6% will perhaps go down. Will sit with the street in terms of expectations. Bajaj Auto is the other one, and this one's had a fantastic run, 74% in the past 6 months, and very recently the company had hit its all-time high level. These are the numbers: 24% top-line growth, driven by a volume growth of 24%, margin expansion of 50 basis points to 19.8%. Driven by lower input costs, improved mix and operating leverage benefits, and this will drive a 30% jump in the company's profitability. So these are some numbers you should have, before they report their numbers. Jay, you spoke about IT. Any particular trading ideas that you see on the way down? Any sell calls?
Late, and I'm anticipating a little bit of bounce to come through. We can use that bounce to short IT sector. And, in fact, I have a long call on the IT names. It's a dangerous long because Intellect Design, I'm positive on it, but it's only for the short term. But as long as the Intellect Design can hold 960, I think it's still got unfinished up move somewhere close to 1280. But since the overall sector is negative, this is trying to swim against the tide. So be a bit watchful and don't get too aggressively long on this. Reduce greatly, lower than 50% of your normal allocation, and hold the stop of 960 for 1300 objective.
Okay, all right. Jay, just hold that thought. I just want to make a point on Exide. It should come up for you on the screen, and my director will quickly pull up Exide, the cash market stock, as well as the futures. Now, there is a big discount if you look at it in terms of the futures. The futures are around 452 approximately, while the cash market is at around 465 rupees, or the shorts are getting squeezed out here. If I'm not mistaken, I think it's in the F&O ban as well. So that's clearly there's a big surge that we're seeing in the cash market. It appears that there is genuine cash market buying out here, and the shorts will get squeezed out. There's a big discount as we speak, close to around 10 rupees. The future split should come up for you at some point of time. I think my director will just pull that up as well. That's what we're talking about. Big difference out there. Nearly a 15 rupee difference is what we're seeing out there. Well, Jay, I wanted your view on, on some of these global monitorables that we're looking at, Brent crude prices, the dollar index, as well as gold. Where are these three headed?
Nigel, important macros to observe. Brent, now I've been pointing out that, on the 1st of March, I posted on my wall saying that, are the markets anticipating a geopolitical event? And the markets did, signal that what's happened last week. And the Brent, both varieties of Brent still have unfinished up move. But the momentum isn't as strong as it was last week. But it's still and it looks like an unfinished up move. For the WTI, I have an objective of 91, and for Brent, I have an objective close to 96. So when it comes to the dollar, as I pointed out last week, be careful because the yields, commodities, stocks, and the dollar were moving up together, and one of them had to break. And it seems the equities that's broken down, and the main indices in the US, Dow Jones, S&P, and the Nasdaq are below the March lows, and it's signaling a possible turn down here. So watch for a counter trend bounce. So we still got pending confirmation to come through. So when it comes to gold and silver, in the extreme short term, they are slightly frothy. So that could be a short-term shock, a very, very short-term shock, but they still got higher highs to come through. And I mean short-term stock, both gold and silver could drop somewhere about 7 to 10% in the short term, but that will still be a corrective decline. But the important thing here is dollar has still got much higher levels to come through. The USD JPY, which is at a 34-year high, has still got another 6.5% to 8% upsides to work with. So we can imagine where the dollar index is heading.
I mean, as the rupees, actually, a lot of Asian currencies are at lows, right? I mean, multi-month lows. The rupee, of course, is something we've been highlighting as well. Rima was talking about IT, Infosys, etc., but is mid-cap IT as well. Look at Persistent, Oracle Financial Services, Coforge. You know, they're all down between 2.5%, 3%. So the mid-cap IT pack is seems to be also under pressure. By the way, Jay, did you mention your targets for oil, WTI or Brent?
That's right. I have a pending objective about 91 for WTI and 96 for Brent. And there's from medium to long term. I pointed this out in January. There is a possibility that we may have begun the move towards 200 plus for Brent. And my original thesis was that we will first drop below $60 and then resume. I'm still not completely sure. We have already started the move. But if we exceed 98, it's not going to stop at $98. We're very likely looking at 200 plus for it.
That a move of such magnitude is driven by what? Driven by, that is of course beyond, but it's very good growth, global growth, or something else.
I'm not completely sure. It could be escalation of the war, or it could be a misstep, a policy misstep by Fed or one of the big central banks by cutting rates when they should not be, and then inflation comes back and shoots up beyond their anticipated levels. So I just don't care about why. I care about when and what.
Yeah, price action is what you focus on. Jay, thank you very much for joining us. Great conversation as always. We'll track it. Markets have closed. It's a lower close for the Nifty around. Actually, not around, a decent bounce from that 61.8% retracement, which is 22,117. From that level, markets bounced, 50 odd points or so by close. Bank Nifty also recovered from the day's lowest point. So the low was about 47,300, a little above that, so 300-point bounce there. Mid caps and small caps did better. Broader market, not quite 2:1 advance, but still, about 1,500 stocks higher, 1,000 odd stocks lower. Lots of action. IT broadly, both large caps and mid caps under pressure.
Okay, the Nifty IT index was down close to about 2.5%, but outside of the index, you had names like an Exide, a Bharti Hexacom, a Marksans Pharma ended with a gain of close to about 13.5%. So lots of action there. NHPC, SJVN, so power names saw buying. You even had Reliance Power ending up with a gain of close to about 5.5%. But with that, it's a wrap and closing bell. Stay tuned. Markets Forward is up next.